The broadcast is now starting. All attendees are in listen-only mode.
Good day everyone and welcome to today's webinar. Chris and I together will show you how to draw and trade with trend lines. So today we are going to show you trend lines. We will be using standard trend lines and something new that Chris and I have been working on, modified Chumash of Forks, and soon we will also release an indicator to automatically spot Chumash of Forks, and we also use it in our trading that we are also giving you setups through our Telegram channel. So before we start, guys, have in mind CFD and Forex trading are leveraged products can result in losses that exceed your deposit, and because of that, those are not suitable for everyone. Please read the full risk disclosure on this web address. Now we need to go with different subjects, but we will start with the trend definition. So the basic premise of drawing a trend line is to actually show a trend. If you don't know how to spot a trend, then you will have a hard time uh, pointing out proper trend lines. Generally speaking, trend lines charting is not hard, but a lot of traders simply don't know when and where to spot and when to chart a trend line. For that reason, we can use fractals and we can use our custom indicator called ECS dots. ECS dots also spot order blocks, but more on that a little bit later. So have in mind that every single trend line can be accurately drawn when there is a trend. So within any trend, there are other smaller trends that make up the whole trend. Uptrend is a series of higher highs and higher lows, while downtrend is a series of lower highs and lower lows. Sideways moving market is not a trend, it's a ranging market. So for a proper trend line placing, you need to have a zigzag, okay, and or thrust and pull back motion. When I say zigzag, this is a standard zigzag, okay, uptrend, downtrend, thrust, pull back, thrust, pull back, thrust, pull back, and so on. So zigzags, thrust and pullback motions are very important when you want to draw a trend line. When we don't have a trend, we say that market is flat. I personally don't trade flat markets. Why? Because I tend to lose when market is flat. For me, in order to make money in Forex trading, CFD trading, equities, whatever I trade, I really need to see a trend, because when I see a trend, then I know when to make a counter trend move. If I don't see a trend, I don't know when to enter, where to enter. Because if I trade flat market, usually that consolidation will break out in any single direction, and then I might lose a trade. And honestly, guys, I lose most of the time when there is no trend. I expect a trend, but if there is no trend, well, then my stop loss can get hit. Otherwise, our success ratio is approximately 7, even 8 out of 10 trades. And it's very important to stress out that for counter trend movements, especially for counter trend movements, placing proper trend lines is of utmost importance. Simply said, if you don't know when and where to put a trend line on which time frame, then, well, definitely you need some practice first on demo account, and then you need to start on live. For that, I'm going to show you, and we're going to show you today how to place a proper trend line and how to draw a proper trend line. When there is a zigzag or a thrust pullback motion, you will spot it immediately. You don't need a zigzag indicator. You just need to watch the price. Thrust, pull back, thrust, pull back, thrust, pull back. So this is a trend. Every trend has a correction. This is trend move. This is correctional move. This is trend move. This is correctional move. Until the major part or a trend line is broken and new trend starts. Okay, this is a trend. This is a correctional move. Trend, correctional move, and so on. During intraday trading, don't be surprised when you can to actually trade two different setups. It means that let's say early morning we can go with a long trade and close a trade in profit just to actually make another short trade in the afternoon. So basically, guys, the main thing with trading is to time your entries. Intraday trading is very specific. Swing traders don't have to pay a lot of attention to intraday movements. But if you are an intraday trader, it's of utmost importance that you actually know which time frame to use, what is the trend on higher time frames in order to use a lower time frame entry. And to know that if you make profit with a long trade, you can also make profit with a short trade if there is a trend change. Trend change we saw actually on euro dollar these last couple of days. There is a major shift during day on euro dollar. A part of the day there is a long trend, then another part of the day there is a short trend. So basically it's good because let's say we can trade both directions in the same day. It doesn't happen always, but when it happens, it's good. So that is why I'm saying on intraday trading, placing proper trend lines is very, very important. This is another example how we can spot a trend when there is a series of high, low, lower highs, lower lows. You will spot a trend in an easy way. But when there is let's say, congestion in the market, then be prepared to either lose a trade or not trade that market at all. So we can have a strong downtrend and uptrend, sideways chop, weak downtrend and uptrend, and very strong. So strong, very strong. It depends. When we have a very strong trend, guys, then there is a chance that you won't be seeing any pullbacks. You see this? This is a very strong trend, downtrend. This was the only way to actually enter on retracement. Otherwise, this would have been qualified as a direct drop. It's always best to have a nice and strong trend like this. Otherwise, if there is a sudden drop in price, do not enter the market. You cannot place a proper trend line. You don't know when the market will actually start to reverse. And there is a big chance that you might end up chasing a trade that is not good. We are heavy users of trend lines. So that's why almost every single of our analysis and preemptive analysis for trades always have some sort of a trend line. Okay. Let's go. Trend is your friend. Okay. The trend is created by market makers, market movers, those who shape the market behavior. Big funds, pension funds, hedge funds, institutional traders, big fund traders, companies, remittance companies. But one thing is always the same. Trend is buy lower, sell higher when you see a trend. It's always buy lower, sell higher. If there is an uptrend, then you want to buy lower. If there is a downtrend, you want to sell higher. And remember, trend exists on each time frame. 1 minute, 1 month, same thing. Except that this movement on 1 minute is 5 pips, and this movement on a monthly time frame can be even 5,000 pips, depending on instrument. But trend exists on each time frame. So it's crucial to do a multiple time frame analysis and try to piggyback momentum from a higher time frame, but that's another subject. We are sticking to trend lines. So what sort of trend lines we actually use in trading? Inner trend lines, intraday trend lines, intra-week trend lines, intra-month trend lines, and ECS fractal fork that is actually based on Chumash of Forks. Now, probably a lot of, I don't know how many of you actually follow Eastern traders, and I need to tell you guys that there are a lot of traders from Russia that Western traders don't know of, but they have some very, very good principles in trading. For example, Stanislav Chuvashov is one of Russian traders that modified Tom DeMark trend lines, and he used that in his own trading methods. I need to tell you that we actually took some principles of this Chumash of Forks, tested it, and now we are actually making a special indicator. We will be coding this fork, and we will be calling that a fractal fork. There are some principles that need to be respected in order to properly draw a, let's call it Chumash of Forks, but we will call it ECS fractal fork. I will delve into details just a couple of minutes later. Let's start first with intraday trend lines. Intraday trend lines are very important because for every intraday trader, intraday trend line can be something to base a possible trade on. We usually plot trend lines on 15-minute or 1 hour time frame, depending on your method or system. They will mark important support resistance levels, but it's always the best when they are in a confluence with other price action factors, such as pivot points, retracements, and so on. So it's always best to have a bigger confluence for a proper trend line placing. Now let me open the chart, and I will show you how intraday trend line should look like. Give me just a few seconds, and I will show you. You can do it manually, but you can also do it with an indicator. There are some indicators that draw these trend lines. I don't use them really. I just use standard trend lines drawn manually. So let's just be quick with this. Okay. So for example, guys, okay, this is one chart. I will open another chart. I don't have this. Yeah, this is better. Okay, so yeah, this is good example. Bitcoin USD. I did the analysis today on live trading ideas, and yeah, I still have those trend lines. So what is important, guys? Let's use BTC actually follows our Mike Camarilla MACD pretty much accurately, and I really like how it shows these patterns. It's very, very, very good. So let's use this on daily. So first of all, guys, this is an uptrend, and when you spot uptrend, you can use fractals. Okay, I will show you. So go to indicators, Bill Williams, fractals like this, or you can use ECS dots that are basically modified fractals. It doesn't matter. For the sake of our analysis, we will actually use ECS dots because I tend to use them also as order block confirmation. Now, just need to actually connect these dots, and you will have a good looking trend line. Do not use steep trend lines. Steep trend lines are not that good. It's always better to use. It's always much better to use normal angular trend lines than very, very steep. Let's call it shallow trend lines. This is a good example of a shallow trend line. This is also a good example of a shallow trend line. Let's try to find a steep trend line. This is, let's say, something in between, but this is something that I don't like to see. This is called a steep trend line. Okay, steep trend lines are not very, very good, because when you see a steep trend line, the chance is that you will actually lose a trade if your trading is based on trend lines. Only good trend lines, like shallow trend lines, are great for trading. This is just an example of a steep trend line, and some traders would say, okay, but when this trend line broke, we actually had an entry. Don't forget that this would have been a late entry, because this candle already signaled a long entry. Not here on daily time frame. It's too much, right? So when I place a trend line, proper trend line should have some angle like this. Okay, not very steep like this. This wouldn't be a good trend line, but I know that some traders prefer to draw it because it can give them like early entries. I don't particularly use that. For this example, I think that this is a great example, because if you connected these two dots here, in the future you would have seen this. So breakout, now there is a possible retest, and then there is a chance for a continuation. I already explained this on today's real-time ideas. So just connect these dots, guys. If you click a trend line property, you can also ray out this trend line. You don't need to do it, but there is an option to ray out a trend line. Raying out means that this trend line will be set into future. I don't do this because it would look like my chart would have a lot of trend lines, and not each trend line is valid for the future, because I'm an intraday trader. I only like to see them on intraday time frames. So what I do is I usually double click this trend line properties, I unray it, and then I just connect these dots and slightly span it in the future. So when I do this, you can see that I think my observation tells me that this could be a breakout pullback continuation, probably from this spot. But now we could be focused, for all BTC USD traders, we can be focused on a retest and down move. Now you can go with both longs and shorts on BTS USD, so it's a good option to trade the CFDs on BTC USD. It's good, guys, so try, give it a go, at least on a demo account. Okay, so we can use also other examples. For example, when would we go for a trend line break on euro on GBP dollar? Of course, we connect dots. The more the dots, the better. If a trend line has more than 3 or 4 touches, the chance is that this trend line will break. So, for example, traders will be probably focused on a break of this trend line. It's always good to have trend line in a confluence with pivots. For example, Camarilla, because that gives you a so-called X cross. If there is a intersection of a trend line with a strong pivot, for me that is, of course, Camarilla, that usually gives you an X cross. And this is an X cross. This is an X cross. Here we don't see an X cross because it's too much. There is, you see, there is not a direct X cross. It will happen in the future, but direct X cross is here, these two levels. You can also do that on 1 hour time frame. So if we use this, where is an X cross? This is an X cross, right? Let's say a very steep trend line. Where is an X cross? Here, this is an X cross. But I don't like these steep trend lines. So it's always good to spot these X crosses, because then when a trend line intersects a pivot point, if it breaks, it will give you, usually it gives you instant pips. Okay, so intraday trend lines are placed on 1 hour to 15-minute time frames. You can do it on 5 minutes, but there is no point really, guys. 5 minute I don't place trend lines on 5-minute time frame. Intra-week trend lines hold a trend during the week. We take 7 to 28 days long trend line as intra-week trend line. You can use it on 1 hour time frame, but it's best seen on 4-hour time frame because it's let's say it's intra-week trend line. It's worth of 7 days. So on 4-hour time frame, you can easily spot let's call it an intra-week trend line. Here, for example, we don't see any particular trend line. Now here we see actually a trend line that started on 17, so it started yesterday. So it still be if it doesn't break, it will still be valid till Friday. So this is an intra-week trend line. Also, Camarilla indicators usually tells you when the week starts, so it's a bit easy to identify or where this week ends. So this vertical line tells you that it was 12th of January. It was Friday. So this is a week price action, weekly price action spotted on 4-hour time frame. So it's very easy to place trend lines here, guys, on 4-hour. It's called weekly time frame, and it's good for swing traders. Okay, now yeah, I showed you a live chart, and of course I will go with Chumash of now trend lines. So let me open my other chart, Chumash of trend line. Let me show you here. Okay, Australian. Let me just open my chart. Okay, Australian dollar. Just give me a few seconds, guys. I have multiple screens here, so I need to show other chart. It's actually Australian dollar. I have two examples, two good examples. So here. Okay, so here we actually can see so-called Chumash of Forks that are basically modified to be used by our own methods. I will tell you that these Chumash of Forks actually consist of different fractals and different. It's not like it's easy, it's hard to spot it. It takes some practice, and I will show you that in a second, guys. So here, for example, we see I will just give me a few seconds to remove other indicators like type 3. We don't need this. We also don't need few of these indicators. We are not interested now on other indicators, just this. Okay. Dots also. Okay. Okay, like this. Okay, so this is something that we are doing on modifying. So when you see fractal, 3 trend line, 3-point fractal touch, you need to draw an upper trend line. Okay, this is good example. This is not good example. I will explain why, but this is good example. 3 fractal touch, okay, or at least 2 fractal touch. Here on this example, we have basically a 2 fractal touch. So we are connecting these fractals like this. Then when there is an angle between one of these fractals with other fractal just slightly below it, okay, this is another touch. Break of this trend line actually gives you a signal for a long trade. You can see it here. And our indicator, oh, sorry guys, the screen is frozen. Okay, I will show you right away. Do you see it now? So see it here. This is a fractal. This is another fractal. And we just pull down a trend line. This is done automatically here. Then another fractal showed up and it's connected. There is a nice angle. See the angle here between these two trend lines. There is a nice angle, guys, here. You see? Very nice angle here. And at the break of this actually trend line, there was a signal to go long. What happened? Just see here. This was not a good, and this is an example when we don't take any trades on our indicator or a system or method, because this trend line here doesn't have an angle. You see, there are actually two trend lines, but there is no angle like this. You always, guys, want to see an angle. Also here, you see, this was a good signal, but I wouldn't take it because there wasn't an angle. Here, this is not great, but still there is an angle. Let's see some other examples. Let's see New Zealand dollar. Yeah, here there was a good example of New Zealand dollar. Here, one fractal, other fractal. Okay, so at least two fractals. And second fractal, you see, this was a high here. So in a downtrend, you need to start from above. One fractal, second fractal, draw a trend line. Then as price retraces, as soon as another fractal shows up as a retrace, when you draw a trend line from the point 2 fractal to this fractal, like this. And this was a nice angle. See how the price went up. I would trade probably a counter trend trade based on the break of this fractal to the downside, because it's also good. 1, 2 fractals, and here 1, 2. You see, now you connect bottoms here with these fractals. And this is mostly used for counter trend trades. Of course, this is used for counter trend trades. Here and here. So price is going up, we can short it if we have a valid signal for a short counter trend trade when this fractal is actually broken. And this is the indicator that we are working on, and we've been working on, and it will be, of course, introduced into Camarilla MACD method, and it will be called type 4 entry based on this indicator. Now it's in testing phase, but basically I already did some live trades with it, and it showed some nice results. Watch this, guys. Great example. I didn't take this trade, but at least you see 15-minute time frame, short entry was actually signaled here. So you see how it works. It can be very, very accurate. Of course, it needs some filtering out, but ultimately it's good, and it shows some nice setups. So once more, for a proper, let's call it Chumash of Forks trend line, you need to have at least two fractals that need to have an angle between highs and lows. Here, when the price is going down, you always start with an upper fractal, making a trend line down to next fractal that is shown as a retracement. And as price further retraces, okay, like this, it will make another push higher in a downtrend. That is a time when the second fractal is shown to draw another trend line. Break of that trend line is actually a signal to go long. Break of this trend line is signal to go short. When price, you see, this actually was a good example on, well, can we call it a counter trend move? Mostly the price is dropping. These two trend lines intersected, making a Chumash of Forks, and bang, the price went down. So the beauty of this is that it can be shown. You see, now there is a sell signal. It's a little bit late sell signal, but I will be working on this because this should have been a signal here. Okay, the break of this fractal would have been a signal, but it doesn't matter. It still is, like, it works good, and if you can spot it immediately, well, then it is a time to actually place a trade and make some pips. So guys, I hope that this is clear. As I say, this Chumash of Forks, you can find materials also on the internet, but currently we are making our own indicator based on that, and of course we will notify you when we have the indicator ready. If you have any questions, guys, do not hesitate to ask me. If anything is not clear, of course, please go ahead and ask. Okay, and I will be more than glad to answer. You see, this was a sell signal here on 4-hour time frame. I mean, there are a lot of different signals. And you just need to filter out as a trader those signals, and usually you will get some nice trades running. Anything you need, guys, go ahead and ask. If everything is clear, now Chris will continue and talk to you soon, guys. Cheers, and as always, trade safe.
Thank you so much, Nenad. Great stuff there. Very interesting to hear all about these new tools. We're going to take a look and continue with trend lines, of course, trend channels. Let me just make myself presenter and share the screen with you. There we go. All right, so you're seeing Admiral Markets chart with some indicators as well, and some trend lines already. Before we dive into trend lines, though, I wanted to start with trend channels. So trend channels, I draw on the 4-hour chart. It should be the chart that you use for trend, obviously. So I think a 4-hour chart is very sturdy, is very practical, is very useful for trend channels. But you know, it really depends what time frames you are used to trading. So there is not necessarily a fixed rule for that. But I think generally 4-hour chart, if you have to choose one, it's good because it's not that, let's say, static as a daily chart, because we only have 5 daily candles in a week. It's not as quick maybe, and doesn't maybe make as drastic moves as the 1-hour chart, right? Because 1-hour chart has a lot of candles in 1 week. So 4-hour chart is kind of like a sweet in-between chart that offers a decent bird's eye view of the market, but without necessarily having to wait too long. That's why I prefer the 4-hour chart. So when I draw trend channels, it has to kind of look natural to me. I'm not going to force channels on the chart that just don't really make sense. But there are plenty of traders that try to fit a trend channel in all cases, and that's fine too. So it really depends on your attitude on that. But I try to just find and draw the ones that kind of pop out naturally to me. What you want to look at though, in general, is basically having a couple of touches for a downtrend on the upside, for an uptrend on the downside. So what do I mean with that? Well, basically, what you want to do is, let's zoom in a little bit so you can see the charts just a tad better. So with a trend channel, for instance, like this, right? Here you have 1, 2, 3 hits like that at the bottom here, right? So that is it. Sorry about that. All right. And so that's the trend channel, the start of a trend channel. That could make sense, right? And fractals, as Nenad said, or ECS dots, help a little bit identify that. So we can add that, or my own ECS fractal indicator. Sorry, there seems to be some warning here. We can add my own custom fractal indicator to that. 1 second. All right, I'm not sure. I think keyboard is being stuck. Sorry for that. Anyhow, we don't have a second fractal actually here, but still 1, 2, 3 spots, as you can see. So that could be the start of an uptrend channel. Of course, we can see the price has been in the downtrend until then, with lower lows, lower highs. So we would be a bit cautious with this channel. It does, this is a channel that, sorry, I think it's the drawing tool that's acting up. I'm not sure why, but okay. We can see that this channel, obviously, we don't know if this will be necessarily a big uptrend or it will be a minor trend, or I should say channel, and that the downtrend will continue. That's why other trend lines are important, and we'll dive into that. One of those could be this trend line, for instance, right? A break of that could indicate a reversal and that the uptrend will start. So those are important things to keep an eye on too. Specifically, maybe this candle right in here is one to be cautious of, or to be actually aware of, because that's the candle that breaks through that resistance trend line, and it kind of confirms the fact that price stays in this channel, right? So anyhow, 3 points is very important. That's my point. That's the main element of a channel. Once you get 3 points, you can draw a trend line or a channel like this. You either have parallel lines, so you have support or resistance level that is important for this channel. And when price breaks through the channel to the downside, it could actually turn out to be a bear flag, for instance. Or if price then breaks through the resistance in this case, like it did here, then it could be actually extending the channel and expanding it. So it's actually accelerating into that direction, because although price was moving up here slowly but surely, it was still relatively choppy. By this break, the channel kind of broke to the upside, price broke above the channel, and it's actually expanding the uptrend channel. When that happens, we can take a look at other levels to understand how far price might go, but eventually we will get a top, of course, and we can use that top again to get a wider kind of channel. All right, so eventually price reaches the bottom of that channel. Now, this is a situation where price kind of goes through the channel, as you can see, but it goes sideways through the channel. So there are a couple of responses that could occur when price is in the channel. One, it bounces at the bottom of the channel, like it did here, for instance, right? It reached the channel and it used that as a bounce. So we had 1, 2, 3 hits, and this was a bounce. This was a bounce, right? But then it kind of broke through it here, but it went sideways after that. So besides a bounce, price can break, obviously, the channel, or kind of go sideways through the channel. What does all of this mean? Bounce is relatively straightforward. Obviously, that means that the channel is continuing, and price is finding support at the bottom of the channel, or in an uptrend, or at the top of the channel in a downtrend, right? How about a break? Well, the break could be a first clue, right, or one of the clues that price is reversing. How about a sideways movement? That actually indicates that although price is breaking, it's doing that passively. And that's not really a strong break. It's not that important of a break, if you see what I mean. So you got to be careful with those passive breaks. Keep an eye on the bottom as well. Because if price fails to break that bottom, then that reversal we might think is occurring because price is breaking through the channel does not necessarily have to occur. So besides the channel, the bottom at the channel or resistance in a downtrend channel is important too. Keep an eye on that. So here we got a break of the channel, but it didn't break the support level, did it? Right? And actually just kind of like sideways like that. So in this case, we had what's called an overthrow, right? Price kind of went through the channel, but it was just kind of like bouncing around. It didn't really have the intent to move lower. It was just correcting, expanding that correction, and ultimately price did continue with the trend. Not necessarily neatly within this trend channel, but eventually. So this is something we want to be aware of that can happen. Market is it's not going to act exactly like we analyze it every time. There are going to be exceptions. There are going to be things that happen a little bit differently. So you got to be aware and flexible for that. One of the things to be on guard for is that the bottom is still a very important level too. All right. So then, how do you know when it breaks back into when price does break out of the channel? How do you know when is a good moment to think about the fact that maybe that was indeed a false break or an overthrow, right? Well, things to keep an eye on is, first of all, is price back in that channel? That would be a big clue, because like here or here, price is smack in it again. So that's a good clue that, okay, it was just temporary. What is a different clue? Using, again, single trend lines to plot resistance. So as we can see, in the meantime, we had 3 points to the downside. 1, 2, 3. So there are two forces in shape at that point, right? We have this channel to the downside. We have a channel to the upside. The channel to the upside is looking more dominant. Why? Because there's a lot more price action in that channel, right? And whereas the smaller channel only has this. And if you look at the movement price has made to the upside, of course, it's way, way more. You can put a fib from the bottom to the top, and you can see that price only went to the 38.50 fib zone. So obviously it moved up a lot more than it moved down. So those are some clues that, well, I want to be careful that the uptrend is still more dominant. All right, and these are just a few clues. Obviously, you can use other factors too, but let's stick to trend lines and channels for the moment. So eventually, price breaks through this trend line. That's already the first clue. That upside will continue and then gets back into the channel. That's the second kind of clue, and eventually breaks this top. Maybe perhaps even a third, but you know that is basically the gist of the thing to analyze. So great, we had price breaking above this downtrend channel, so that's over. That's probably a bull flag. It's a chart pattern that indicates correction and a likely continuation of the trend, basically. All right. Now, once you have price in the channel, or you think that the uptrend will continue, it's perfectly fine to draw another channel. Right? We don't have to only keep this channel. It's perfectly fine to draw another channel that makes sense. And we can do that again, looking for 3 hits, right? So something like this could make sense, right? And we can use that as an indication of how far this upside will last. And we can then use that channel, go to lower time frames and try to trade that, for instance, or even on this time frame. It depends. Now, what is a good trend channel? Not only 3 hits is important, it's also the angle that's critical. I don't know if you noticed, but this particular angle, let me make it a little bit different color. Let me make it green then, I guess. The angle of the green channel is steeper than the angle of the brown channel, isn't it? Right. So steep channels are not really sustainable in the sense that gravity will kick in. Price will just not be able to keep up that pace of moving so quickly to the up or downside. It will just run out of steam. It just can't maintain that angle. Whereas if it's a 45-degree or maybe 30-degree angle like the brown one, that's something that price can handle more, because what happens is that price will move up, then it will correct a little bit, it will move up, it will correct. There's balance in that move, all right, with the trend channel. So trend channels that have more, a moderate angle are in fact better to consider as a trend channel. These steeper channels, I would not consider really trend channels. You could just call them channels. They still provide information. They provide useful information about the move, the swing that is currently developing. But just realize that their chances of extending longer into the future are lower. All right, and you see indeed that eventually price breaks through that channel and then breaks through the old trend line. Old trend channel. Of course, when the price breaks through that, you can take it off or you can keep it on. If it's a channel that has a shallow angle, it might make sense to keep it on, because those old lines will still perhaps play a role as future support or resistance. If you think it has no value, of course, feel free to take it off. And then we can draw something else. We can see, is there something else that can be drawn on this, right? So maybe this way, right? And it does provide a little bit of value, but then it breaks to the downside, all right? So basically price then goes into a sideways mode correction. We actually have 3 kind of points with a lower highs already. So at that point, we can already start thinking perhaps about a downtrend channel like this, in fact, which lasts for a while, as you can see as well. So there's some trades within that channel. Then price breaks above it. Again, maybe make some sideways move. As I said, you got to be careful of resistance and support when price is breaking out of those channels. All right. Now, if you think that price is making a bigger range, no need to draw any channels necessarily. You can just draw horizontal lines and say, okay, that's the range. This is the zone that price is in. Let's wait for price to break, or let's try to trade in that range, depending on what type of trader you are. All right, so far all clear with regard to trend channels? If not, feel free to let me know. There are a couple of more things I wanted to tell you about trend channels. Is besides the 3 hits and the angle. So if it's too shallow of an angle, by the way, right, then it's also looking corrective. It looks more like a bear flag or a bull flag. If it's too steep, it's unsustainable. So once again, that middle of the kind of angle is the most sustainable one, right? But you can draw multiple channels, really. So just want to one more time emphasize is that you can have channels within channels and channels within channels, right? As long as you understand what's going on and your charts are not confusing you. Now, other things that are important are connecting the top line in an uptrend and connecting the bottom line in a downtrend, right? So obviously, an uptrend you should have 3 clear points, right? But what about the top line? Where do you place that? So as I said, you want to use the tops that make sense. That could be here or here at first. If it expands, you can move it up, of course, and use a new tops that make sense. All right. So you can be flexible in that and change that. All right. But the best is to find a fractal or previous top or bottom that makes sense. So in this case, this is a great top. This is a great top. And the reason why we still want to use logical kind of levels, support and resistance levels, is because of the fact that this line could be used as well. Although it's less important, this line is less important, the resistance, than the support line in an uptrend channel. And the same is valid for downtrend channel. The top line is more important than the bottom line. All right. It is still a value. Why? Because price could once again break through it and expand that channel once again, even more so. It's possible. Or price can overthrow it a little bit, but then get back into the trend. So still, it is a level of value. It does offer perhaps a target. You can use it as a target. You can use it as a level where the trend might end, right? It might be the last push up. It hits the channel and that's it. It reverses. So you can use it even for reversal potentials. I would personally definitely be aware that it's not the only thing that is needed. Other things should confirm such trade ideas, right? Just to be clear. So, okay, and other things that are important are, if you really like channels and you want to dive into details, then this might be for you. If you're not really big channel fan, probably not for you, but you can also add like this lines in the channel. You can first of all add a middle line. The middle line like this. All right. All right, this is the middle line. And that obviously should be in the middle. And it's basically kind of called, it could be called different ways, but let's say the heart line, or you could use different words for that. But basically, it is the line that offers kind of a resting spot for price. Price typically respects it. It kind of uses as support and resistance at the same time. It could be the old resistance line from, sorry, wrong button there. It could be the old resistance line in the past. When price breaks through it, that could be the middle line, right? In this case, it doesn't really work too well, but typically you'll see price stop there often, and kind of like when you get a channel like this, break through it, then use it as support. So it will be a level where price is kind of oscillating around it, but respecting it. Then you have the quarter lines, basically, are here. And those quarter lines basically just give you a little bit idea of a zone, right? The top quarter is the zone where price will be oversold, where price has extended relatively quite far already, and is in a area, a zone where it could be reversing or bouncing. Whereas price at the bottom, all right, is of course an interesting bouncing spot, right? Anywhere in the middle, it depends on the context. All right, but if you are looking at a bounce at the bottom, the first target could be the middle, and the second target could be the top, for instance. All right, so that's basically it regarding trend channels. You can use it indeed on different time frames. Angel is mentioning that using channels on daily chart is the best. Let's take a quick look on the daily chart, right? It might be a little bit slower, obviously, but definitely, I think that these concepts really are not any time related. I think you can really use it on all, but and then these principles are useful for all of these time frames. I guess for some traders, this time frame might be a bit slower, right? But if you see it on a daily time frame, why not use it then? There's nothing wrong with it, right? Here we have price in uptrend channel 2. Now this is a quite steep one, and we see that price kind of breaks a little bit below it. So we might want to adjust that a little bit, and it's okay to adjust it. Okay, so we have price. Let me show you. That's actually one more thing I didn't mention actually, so it's good we talk about it. Is that here, at first we had the channel like this, didn't we? All right, and we can even put it like this, but you get the point. So then price kind of breaks through it, but then still bounces. Do we leave it like that? We could easily leave it like that, depending on the angle, but you might want to adjust it too and incorporate this hit. Then this bottom is a little bit away from that trend channel. Is that a big deal? No. It really doesn't, from my point of view, matter. It's a small difference. I think what's the difference here? 25 pips. Anything like 30 pips. Maybe even 50 on a daily chart, 30 on a 4-hour chart. Really, if price gets within 30 pips on a 4-hour chart of that channel, I consider it a hit. I consider that a touch. So that's just my rule of thumb, because the markets are not, I don't think we should be too overly precise with these things. It's just a rough idea, if you see what I mean. So I think that this is a channel with 3 hits, although this one misses it by a bit. That's my point. That's another important factor. 1, 2, 3, and the channel does pretty well. Then price kind of breaks a little bit, but goes back into it. And as I said, it didn't break this bottom, actually. So we can leave that channel, or we can place a second channel with a little bit of a correction of that channel. So we could do like this, and perhaps even leave both on, right? There we go. And eventually, price does break through this channel and starts to make a sideways zone like this. So we can draw these lines, and eventually price breaks through that support, the horizontal support, and that's the end of that uptrend, right? So you can see that we had 3 channels, depending on the stage of that trend. All right, now we don't have to keep them all on, but you can if you want. All right, that's trend channels. I want to talk about trend lines quickly, but I see I only have a few minutes, so let's try to cover that a little bit faster. Than basically, trend lines can be used in various ways. So let me renew this template a little bit, or I don't know. Let's just renew it, I guess. All right, so instead of a trend channel, obviously you can use a trend line too, and you don't have to have that parallel line. It's depends on you. Trend lines in general are, yes, great to spot patterns indeed, Angel. Absolutely. So you're talking about triangles, flags, perfect stuff. Trend lines. Let me think for a second. I had where was that? There was some kind of pattern that I saw recently. Hang on. Maybe here. Here, right? Flag and another flag here. And let's see, I remember seeing some triangle. Here. Well, that's not the one I was looking for, but at least I found something here where price is making some kind of formation correction, right? So, these are good things for trend lines are good for that. They're also good for, and therefore they're also good for breakouts of those patterns. So we could be looking for price to break through those patterns and continue or reverse, right? So great for patterns, breakouts, and bounces, basically, as price makes consolidations and corrects. They can also be good on steep pushes like this, right? Now it's, it is a little bit, maybe, I would say maybe a little bit less valuable, but still useful, because if you're in a long and price breaks through this support trend line, then you know that the most impulsive part of the upside is over. Now it could still continue, don't get me wrong, but there's also a chance the price could go sideways or reverse. So yes, it could be a good way to trail stop. It could be a good way to look on lower time frames for some continuation trades. But steep trend lines like that give a little bit of an idea about when that particular momentum is over, as you can see. So that could be good for taking profit, trail stop losses, or even reversal trades. But that depends on the context, though. It's not that's something that can be used automatically in every situation. No, context is needed to get a feeling whether that makes sense at that spot. So the angle is important. A steep trend line would be something that is indicating momentum. A shallow line is good for patterns, breakouts, and bounces, whereas a medium angled line will give us probably more just kind of general ideas about resistance and support levels. These trend lines all give kind of potential support and resistance levels, so we can be used as a way to trade at those levels or to avoid trading into those levels, right? So for instance, here we might want to avoid taking a long right into that resistance because resistance is so close, right? How about, I don't know, one more example somewhere. Let me see if I can find something. So maybe here, do you want to short it here right in front of that support trend line, whereas price is going sideways? Probably not, right? Rhetorical question. So those trend lines help with, but if price were to break below this, then maybe yes, right? Because it's breaking. So it gives an idea about potential trades, but also about how avoiding certain trades could be good too. So that's how you can combine those things to get quite a lot of analysis actually just from trend lines. It's quite remarkable and useful. I like trend lines. I think that they give great insight, and I've always been a trend line fan and appreciate it a lot. I use trend channels a little bit less, to be honest, nowadays, because I'm more focused on moving averages, and they provide already so much information. But if if I see them, it's too tempting not to draw them. They're just it's fun to draw, but also very useful in my view, and good extra info. So yeah, that's about it. Now, just to give you, how trend lines could help. I mean, just to give you an idea how much information you can get from all these trend lines here, right? It's really a ton right there, one after another, really, that could help with spotting and understanding what's going on. And that's not on this time frame only, but on all of these time frames, right? So, and if you're interested, you can actually check out the wave analysis of mine. Why wave analysis? What does that have to do with trend lines? Is because I use a lot of trend lines in those wave analysis. So you will see trend lines. You will see whole trend lines are non-broken ones. Once they're dotted, they're broken. But I will leave often enough most of the trend lines on unless it's kind of bothering the overall view of the chart. I will mostly leave it on the chart just to show you how those trend lines look like. How did they, just to give you a little bit of a pattern recognition in a way. So if you're interested in trend lines, you still might want to check out my wave analysis because it does use a lot of trend lines, and it does show how those trend lines, how price has responded to those trend lines in the past by either breaking or bouncing, basically. And that could be maybe an interesting way not only to know more about waves, but also about trend lines, in fact. But with that said, if you have any questions, feel free to let us know. Otherwise, more webinars next week. Education, Forex and CFD webinars, same time, same place, with Admiral Markets. Of course, if you're interested in some of those tools you saw, by the way, such as the Keltner channel, such as the pivot points and the mini terminal, and many, many more, you can check out MetaTrader Supreme Edition plugin, and you can download that for free and try it out to see if it is something for you. Otherwise, analytics, courses under education, and a lot of info about Admiral Markets, how you can trade, start trading, which instruments, etc., are all there to be found. Here, I want to finally zoom in because the computer was a little bit slow, but now you see a few trend lines here. Here's one, broken ones, right? Here one. So you'll see this is maybe on the lower side of that, but typically you'll see a bit more trend lines in that as well. And then I think also regularly uses them. So that's about it for now. Thanks for joining. Appreciate that. Hope that this does help you with your trading. If not, you can always ask us in these live trading webinars. Nenad on Monday and Wednesday, I on Tuesday, Wednesday. Practically, Nenad, Chris, ask us, I have this in this trend line. Does that make sense? I have this in this channel. Can you look at this pair? Feel free to actively seek our opinion about how you analyze the chart with trend channels and trend lines, and feel free to ask practical questions as well in these sessions. Not only here, if you don't have any questions now, no problem, but if you do bump into them, know that you can reach out to us in these webinars about trend lines as well. All right? Talk to you soon. Cheers.